Welcome to the second part of the liquidity concepts. Now, what I'm going to do in this video, guys, is I'm just going to map out liquidity on the chart, and this is what you should do right now as well. So all these theories that we've learned right now about equal lows, equal highs, trendline liquidity, ranges, and so on, swing highs, swing lows, try to apply them on a chart, and I'm going to just show you right now how you should do it, because the idea is right now just to understand that this whole market is based off liquidity. So really every single movement you can interpret with liquidity. So very simple, I would just start right over here. What do you see here is, yes, trendline liquidity or equal lows, doesn't matter at the end. So mapping this out, what the market created at the same time is liquidity to the upside, right? And what we can see is that the price, when it created this liquidity point here to the downside, with this movement to the downside, it created this liquidity. Then it grabbed the liquidity from above. Okay, so exactly here above, you got all these retailers trying to short this, in this case, kind of a triangle, right? So they're trying to short it. This is why the price is faking out. And then boom, dropping. And what kind of liquidity is this market targeting? Exactly this one over here. And you can see how pretty nicely they just boom pushed it one last time to the downside. So when you see candles like that, then you know exactly that institutions were acting here. So this is kind of then our demand zone as well. So it could be a future target. So let's see. In this case, price didn't respect it, but this is how you can of course always identify it. In this case, we're just on the 1 hour time frame and we don't see the bigger picture, and you always need to see the bigger picture. But in this case, what I wanted to illustrate is right now how beautiful the market is always targeting the liquidity. So here it was targeted, and here now it used this liquidity to bring the price up higher, and it also broke here structure at the end, right? So we got a BUS, and we've targeted what liquidity? So we target here in this case the equal high liquidity. So you can also put it like that you did just use here, because you got here what? Equal highs. That's it. So it's not really difficult, to be honest, and you just put here liquidity up. Perfect. Then price used this liquidity to give us a quick reaction, and the market targeted the whole liquidity that was located there. Okay, so this liquidity was here targeted to bring the price afterwards again lower. Boom. What do you see here? This one, right? So this is a pretty nice trend line liquidity. So you can see, look at this. This trend line is then kind of in shape, still good, right? And you just have here this one fake out. And this is what they're always doing. And we just need to recognize this, right? Just to understand, because what for us important will be then is to combine this with structure. Because if you don't combine this kind of thing with structure, you will be super confused about what the market is about to do. But when you know structure exactly, then you know what kind of liquidity you should target at the end, right? So this will be then the step by step. This is where we have so many things that we would like to include in our trading. But in this video, I just wanted to explain you the concepts of liquidity. So price is pushing, okay? Look at this. In this case, the market just used this liquidity to buy through it. So I explained to you that one in the theory as well, that whenever you have liquidity, it is not absolutely necessary that the market will use the liquidity to drop the price afterwards to the downside. In this case, this liquidity is completely different compared to this one. Why? You can see that the price actually targeted this specific liquidity here with this one. So it was already targeted, and this is what the price already leaded to bring the price lower, okay? To target this liquidity, and then this liquidity was used to bring the price up higher. Now that you will expect exactly at this point, which is of course a swing high, that you expect your price to drop lower, is something which you should not do, because price will not do it. In this case, the price will just push up higher, because this liquidity from here was already taken, and this one here is right now just the reaction of taking it from here. So we don't have here that much liquidity. Of course there is liquidity, but not really much, so you cannot compare the liquidity point from here with this one in this case, because you've seen here already a reaction, right? And this one wasn't a quick reaction because we wanted to target specifically this one. Okay, then price pushed up higher, what you can see here, pretty nice, equal lows. Okay, so price pushed up and target this one. Then what do you see here? Now you need to always refine this. Okay, don't let it like that. You can right now delete this, because what you can see right now here is this. So we got equal lows right over there, and this is a future target for us, and this is what the market targeted with this one. Boom, just below these equal lows, and then price started to move up higher. And if you understand right now structure, you will see this is my range in this case, for example. Okay, you just need to move on here then to a higher time frame. So for example, let me just go here to the 4 hours, show it to you. You can see how beautiful that this is. From here, price broke structure, moved up higher, and here is kind of the liquidity below it. Now what you can see here as well is I had here previously this range. Okay, so it still works. Okay, whenever you see liquidity, okay, like this, so this is a pretty nice liquidity. You can see it on the 4 hours as well, so you should be definitely aware of price will potentially go from here long. Okay, always. Okay, so let's just put everything back and let's see what we can see here as well from the 1 hour time frame. Then in this case, very beautiful, what trendline liquidity. Price just used that. When you see trendline liquidity, you would like to see price just pushing through it like this. Okay, going like crazy. So here you got as well trendline liquidity here below. So imagine how many retail liquidity you have here above. That's crazy, guys. It's really crazy how many liquidity there is located, and this whole liquidity will be absorbed by the institutions just taking long. And look at this above this, right? Then here quick reaction, but price wanted to go up higher because he knows we have here something. Price didn't took that liquidity, but still went down lower because you also have here something, right? You have here something. What the price did here is a break of structure to bring the people to think that the market is short. Okay, so this is the whole logic behind break of structure at the end. It's only to bring people on the other side. Then price is dropping, creating here overall liquidity, and then getting these highs out, these whole highs, because there is the most liquidity. You need to understand in this case, let me just delete everything. Again, liquidity here, right? This liquidity was taken, this one not. This one and this one not. These two levels are still intact. Now, with this break of structure, the majority is always looking to short. So retailers are not dumb right now. They know, okay, break of structure, potentially the price will reverse. But what we know is we will not just get into the trade involved if we don't see price is getting liquidity. And we know in this case that we have here these equal highs. So I recommend you to map this out at the end is like that. So you got equal highs. So I will not target right now this zone because I know there is equal highs. So the chance that the price will target this liquidity is super high. And look at this, what the price did. And then due to the price went so crazy to the downside, it created here a new supply zone. And this is then actually our entry that we should look for. And what you see within the supply zone is another supply zone. And this is how you can at the end even mitigate everything. Boom. And what do you see here else? Price created this liquidity zone. So price pushes into the supply zone to mitigate this huge long position and this one, because that was the last one. With this move up, it already mitigated this position here. Then price came back into it. Oh yeah, we have a liquidity target, so boom, price is dropping. Use the liquidity to give us a quick reaction. Where did it went? Exactly into our supply zone here again. So we got supply chain and price is dropping. Very simply at the end. Boom. What do you see here? Liquidity. Liquidity above these highs, because here price is just moving to the downside, so you got your pretty nice trendline liquidity in this case, and price is tapping in where? Into the last push up. So from a structural standpoint, definitely a structural point, because we got here BOS, price moving but still gave us a quick reaction, and this is where institutions got in their long position, and this is where they are getting rid of it, and price is dropping. So very simply at the end, so hopefully you got this concept super strong. What do you see here? This is Wyckoff accumulation in this case. Pretty easy example. Now Wyckoff accumulation, below an Wyckoff accumulation you have what? A ton of liquidity. So really a ton of liquidity. Then you got here something as well. So you can see it here. You got the liquidity as well. Price is targeting this whole thing. Okay, in this case, it was not targeted to push the price up higher. It was targeted to bring the price lower, as we are overall in a bearish situation. Okay. Then what we can see here is, in this case, you got equal lows overall here, right? So these equal lows are targeted, of course, as well. And this one is connected with this one as well. So in this case, here below this whole trend line, you got a ton of liquidity, and this is where, because this is a higher time frame in this case, right? This is nothing which surprises us, because this is what we wanted to see. Now, very important when you see something like that on a higher time frame is for you to not just look here to get involved into a trade. No, anyways, you do not have here any confirmations. But when you see something like that here, and probably on the lower time frames, you will see break of structure, and you will just think of, okay, I will get into it. Be careful, because what the prices will do here more than likely is they will even drop lower, and then at some point they will reverse, and this is where you should take action and to look to get involved into this trade. Okay. What we can see here, just here, you can just see here liquidity, which the price currently targeted it, right? So this is a very obvious liquidity, because you are, in this case, you are already in a high liquidity zone, right? This is a high liquidity zone. Price went lower, created this kind of thing, pushed the price all the way to the upside. So this is definitely a future target for us. And as you can see here, with this price, it just took out this low only. So we know, okay, there is still liquidity left. Push price up higher, and then targeted this whole liquidity afterwards, and price pushed down crazy to the downside. What do you see here? Liquidity. Price targeted this liquidity pretty hard. So you can see when you have multiple liquidity levels and very high liquidity level, and in this case, because we're on the 1 hour time frame, you can spot this kind of thing, and you see, okay, this is the higher time frame. Definitely in the 4 hours and daily, you will see that there is something. Then you will see more than likely something like that. What do you have here? Again, liquidity. What do you have here? You have, in this case, a Wyckoff distribution. Okay, so price created here something, took this out, dropped the price to the downside, and boom. What else can we see? If we go here to the upside, in this case, nothing really special, because this for me right now more than likely an uptrend. Here you can spot liquidity on the lower time frame, but right now nothing very significant that we should look for when you see something like that, because price is moving lower, right? Just going from structure levels to structure ranges. So everything is good in this case. Here it built liquidity. This is the only thing which the market here really did. It built liquidity with this trend line, and it was taken out, and it took out these, as you can see, took out and used the liquidity to push up higher. Furthermore, what you can see here is you had liquidity here, okay, price pushed up lower in this case here, so higher and then lower to target it, went higher and again, okay. So really just playing with us. So whenever, just to understand this concept is, whenever institution would like to go into a certain direction, it will always fake you out, because the whole idea behind this kind of concept is, especially when you see setups where price is moving to the downside and then it is breaking structure, and it is clear price will definitely be long from this zone. It will be definitely long. What you will see in reality is that the price will do then something like that. It will just go lower. It will do something like that, and you're already in a long position, and you would just say, yeah, but it's 100%. 100% this is a long. But the market would just do something like that, and your position will be hit, and then suddenly it will push up higher because you got here liquidity, for example, and it's just targeting liquidity, or you got here liquidity and it's just targeting this liquidity. The idea of this kind of thing is to always understand what the masses is thinking, because when the masses know, okay, well, price should go long, then more than likely what the price will do is it will go down lower to generate liquidity, to fake out people on both directions, to give them then also additional confirmation. They will give them break of structure, and they will say, yes, now it's time. They are getting here immediately involved. What the price will do is then something like that, getting into our demand zone, or even going lower than this, pushing up higher, and then we know, okay, now it's really confirmed because we took liquidity, and then price should go up higher. So this should be actually your roadmap. So not always when you see break of structure, don't just think of, okay, price should just get into my demand zone. We should get involved. We would like to see price getting liquidity from here and from both sides. And the way on how you're doing it is exactly like this, what we've learned here. So hopefully this is clear for you, this example. Hopefully you enjoy that. Here, last one for you. You can see here how beautiful price took this liquidity, pressed the price to the downside here, everything liquidity, use the liquidity, get into the supply zone, and price dropped. So it's really, really easy. You just need to train your eyes, and that's your job right now, my friends. See you then in the next video. Bye bye.